Hello everybody, welcome back. It's Connor here from Trade Talk, Pippin Ain't Easy. Just going to have a little bit of a talk around the water cooler on this Sunday, 19th of August 2018. So just going through my trades in the week that was, as the markets aren't open at the moment, the Forex. Just looking at the Euro USD pair at the moment. As you know, I have been in this pair for about 2 months. I got in on this long, big bearish candle here, and I had to suck it up and go through all this noise for about 47 days, and now it's broke through. This is due to the economy at the moment, so much so that Europe seems to look like it's in a bit of trouble with the Turkish lira having their economy going through some hardship with inflation and a lot of debt. They have to pay back a lot of their debt with companies in the USD currency, and given that their lira is losing so much strength, the banks are starting to get a little bit worried over there. Because they obviously lend, the Eurobank lends a lot of money to them and everyone else, and as everybody knows, the Central Bank of Europe seems to be very irresponsible with their lending practices. So that's the trade that I'm in at the moment. That's the only one that I'm in, but the other ones I'm interested in for next week is, one of them is the Great British Pound Aussie dollar. The Aussie dollar is now starting to show a bit of strength. So, as you can see, it's had one big, long move downwards with a little bit of funny business in here. What I would do to that is just do one of my box trades. I could draw a simple box around it, like this, and now that there's been another push down to the downside and it doesn't have any clear support or resistance coming up, that is really looking good for next week, so I'll be keeping an eye on that. I was looking at the New Zealand Singapore dollar, but that seems to have been going. I don't think I'll get into that, as this was a little bit of indecisiveness, and a push down would have been good. However, it looks like it's going for a push up. Another one that I've been talking about is gold. So gold has made a move on the downwards, and has got down to some pretty significant lows, as we could see. I said last week it would be a good time to get in around about this level at the 11.59 per ounce. And as I said that, we can see that it started to go back up and show some strength. I believe that the gold would be quite a good commodity to get into, due to, like I said, there seems to be a little bit of confusion between the dollar doing well and the euro doing badly. People think that it's dollar strength. I can guarantee you, with what Trump is doing with the tariffs, and between the trade war between China and the US, it's not going to be good for anyone. China, especially, people talk about China owning the USA's debt, but what the media doesn't seem to tell you is how much debt China is in. All right, so if the USA is in $21 trillion of debt, well, China's in $28 trillion of debt. So their debt to GDP ratio is currently 328%. And I believe that the US dollar, the US debt to GDP ratio, forgive me if I'm wrong, it's around about 105%. So there seems to be a large disparity of that. Now, if there was to be an economic collapse in the future, China has about 2.4% gold on reserve. So if you can just do the quick maths, guys, you will see that China does not have enough money, does not have enough gold, to give back to all the people who bear Chinese yuan. So that's just something to think about. Other pairs, not much going on here. Silver, doing well. I would have liked to have got into this, but this candle here didn't reach above this bearish candle. So the next candle might just be playing silly buggers, I suspect, especially on a Monday when it's going to be quite slow to start off, and it may have a retracement back down. Funnily enough, the US dollar and silver are looking suspiciously correlated. The US, I would have liked to have got into the Australian dollar, showing a bit of strength, especially with this move up. And as you can see, it's got 1, 2, 3 touches down here, 2 touches here, and 1, 2, 3 touches here, to suggest that there has been some sort of indecision box and they've decided it's going to go straight up. The reason why I'm not going to take this trade is because I have some support and resistance right here on the about the 73.4 cent mark. So if I was to show you some method behind my madness, if I'm going to go to the weekly, I've related this touch here to be quite a significant touch. Okay, so we will see how that goes. We will see how that plays through. Other than that, I'm not actually looking at a lot else. But for those at home, again, to reiterate, I think my predictions will be that the Aussie dollar will gain some strength next week. Gold's going to be interesting to look at. If not to buy on the market as a contract, definitely buying it in physical form may be a suggestion, although the lower the price, normally the higher the premium. But as a long-term investment, as we can see, let's have a look on the monthly, that would be even better. When you start to get around the 2008, if there's ever any indecision, some sort of crisis, gold traditionally really makes its move up. And like I said, if some of these countries, we're starting to see some countries really fold under some pressure, with Venezuela folding, Italy looks in trouble, Turkey looks in trouble. Coincidentally, Venezuela is the largest country selling gold at the moment. So make of that what you will. But everything else, don't really have a whole lot to talk about, guys. If anyone wants to tell me what they're interested in, what they're looking at, please leave a comment. Can you like it? Can you subscribe? Can you press that little bell thing in the corner? I'm not exactly sure what any of what that does, but press it all the same, and I'll see you next week. All right, take care. Bye.